Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the government has moved to simplify the GST return filing process. The new draft GST return filing forms are here. We've been flooded with queries, and to answer them, we have with us this evening M.K. Sinha, the Joint Secretary at the CBIC and Member Secretary to the Group of Ministers on the simplification of GST returns. But first up, let's go across to our colleague Timsy Jaipuria for a lowdown on what these new forms look like. Timsy.
Well, the 28th GST Council meeting had approved the new simplified GST return forms, which are now available in public domain for stakeholders to comment. Now, the simplified GST return form gives a breather to small taxpayers by allowing them to opt to file returns on quarterly basis. And for nil taxpayers, the returns can be filed by just sending a SMS. Doing away with the current three-stage return filing process, the Council has made it easy for getting in just one single return form to the taxpayers, and they can now easily file and identify themselves as to what they want to do, whether they want to amend their returns or they want to file quarterly returns, or do they want to just upload their invoices.
All right, Timsy, so that's sum and substance of the changes that have been proposed. So as per the new format, the first step a taxpayer has to take is to identify himself under the categories as to whether he is a small or a large taxpayer. If he is indeed a small taxpayer, which means he has a turnover of less than 5 crore rupees per annum, he can choose to file either a monthly return, a quarterly return, or a simplified quarterly return. However, a large taxpayer has to continue to file returns on a monthly basis. Joining us now to take us through what are the changes and why these changes have been made with us is Manish Sinha. Mr. Sinha, appreciate you joining us here on CNBC TV18. Very quickly, and you know, these are the comments that we've been getting in from our tax experts as well as people who are writing in with their queries. Has the return format really simplified because the GSTR1 and GSTR2 has now been replaced with annexures to the main return with details almost remaining the same? So is this old wine in a new bottle?
No, it is not. GSTR 1, 2, 3 was a three-step process, and GSTR 2 was the most difficult part of the return. Now you have only one return. What is going in the annexure of the return is only the invoices. So long as invoice has to be captured, it will come somewhere. So it is a main return, and there are invoices as annexure to the return. There is no GSTR 2. The input tax credit table takes care of some of the validations which you generally would like to do in relation to input tax credit, and then you pay the taxes. So it is a much simplified return than it was before. Also, we had multiple stages of stakeholder consultations before this design was finalized by the group of ministers and approved by the council. So this does take on board concerns of large and small taxpayers in a very significant way.
What have been the main pain points that you have addressed through this new return format?
First and foremost is that from three-stage return process, you are returning to a single-stage return process. Second, there was a lot of back and forth movement of information in the last design. GSTR1 going to 1A, going to 2, going to 2A, and then 3. So there were that multiplicity of flow of information has been changed with you. Unilateral flow of information. The threshold for a small taxpayer has been increased to 5 crore. And these taxpayers will be able to file now quarterly return with monthly tax payment. Their pre-identified profiles have been created, giving them very simple return for small traders who are doing only B2C supplies, or somebody who has a very small B2B and B2C supply and has domestic purchases. So all in all, 93% of the taxpayers should be filing returns which are very simple.
Okay, so let's take that point forward now and let's go back across to Timsy. So Timsy, you know, we've got the Sahaj form, the Sugam form, as well as the quarterly return. So take us through the details of that.
Well, if you see the return forms, and let me just explain it, the major changes which have come now are for making compliance easier for small taxpayers. A small taxpayer has to choose from 3 forms: Sahaj, Sugam, and Quarterly Simple. under Sahaj, a form which is basically designed for taxpayers who sell directly to consumers. They can file quarterly returns also as per their choice, but in case they will have to pay taxes on monthly basis. If you see, this is how the Sahaj form looks like, and we could also now go back to Mr. Sinha, who can explain this for us. What is Sahaj and how best, what should a taxpayer should focus on?
Yeah.
In Sahaj, actually, where there is only B2C supply, all he has to do is fill in the details of B2C, total value of sale and the taxes payable.
Okay.
As far as his credit is concerned, it flows directly to his input tax credit table from the invoices uploaded by his sellers. So, he uploads his invoice, which is basically gives the detail of B2C sales, takes credit on the basis of invoice uploaded by his sellers, and then makes the payment of tax. So that is as simple as that. There is no intermediate step involved here. There is no GSTR 123 involved here. All he has to do is declare his B2C totals value, taxes payable, take credit on the basis of invoice uploaded by the suppliers, and pay the taxes. And this he has to do on a quarterly basis.
Okay.
In month 1 and 2, all he has to do is tell as to what is the expected sale value and the credit which he would want to use to offset the liability and pay taxes.
Okay, so that's as far as Sahaj is concerned. What about Sugam?
Sugam has one more extra feature, and that is if the taxpayer wants to also make B2B supplies and he's not making B2C supplies only. By example, I'll say B2C is essentially your neighborhood kirana store who will sell essentially to the consumers. But there could be small businesses who would like to issue invoices using which another business can take credit, but predominantly their supply is domestic purchase and sale. They can use B2C and B2B combination,
which is the Sugam form.
Which is the Sugam form.
And what about quarterly simplified?
Quarterly simplified is simplified from the main return in as much that there are 3 features which have been removed from the main return. That is, those supplies which do not create liability, for example, exempt supplies, non-GST supplies have been removed. They do not need to go through the process of elaborate credit accounting, which involves pending, keeping some invoices pending, keep rejecting some invoices, and then reporting missing invoices. These 2 steps are missing, and then capital goods credit also is not required to be reported. So simplification in output table, simplification in credit table from the main return leads to simplified quarterly return.
Okay, you know, this is a question that's come in from Prateek Jain of PwC, who's been on our GST panel since it rolled out. And since we were talking about B2B customers, his question is that given that small taxpayers also need to file monthly annexures for supplies to B2B customers and also pay tax on a monthly basis, can this be seen as compliance simplification really?
I fear that factually there is a little bit of a difference. A person who's small and is filing quarterly return will not need to file annexures on a monthly basis. All he needs to do is upload his invoice on a monthly basis, because the entire design is based on the concept of continuous upload and visibility. It brings transparency to the system. You are able to upload your invoice and your buyer is able to see the invoice.
Okay.
So that will keep happening continuously. So once for a particular month, you have uploaded all your invoices, your buyer is able to see, you will pay your taxes on the self-declaration basis. The annexure to a return is not required to be filed on a monthly basis.
It's not required to be filed on a monthly basis. Okay, so that's an important clarification. We've got another question that's come in, and this one is coming from a viewer, Pankaj Chaudhary. Pankaj, I hope you're watching. This is your question. The government is not clarified yet which return is to be filed by the taxpayers for the month of August and so on, whether GSTR 3B and GSTR 1 will continue.
As far as the present system of GSTR 3B and GSTR 1 is concerned, this process will continue till the new design takes over. And new
which
design
is when?
Which could be some. The council has given the date of 1st of January, so I'll stand by that date as of now.
1st of January is when you're hoping, okay?
Okay, so that's the date council has given. That's not my date. And till such time, GSTR 3B and GSTR 1 process will continue.
Okay, so GSTR 3B and GSTR 1 will continue at least till the 1st of January. That is the date set by the GST Council to make the move to the new simplified format. Another query, and this one is also coming to us from one of our viewers, saying, what is the need to report HSN summary for small taxpayers in the Sehaj form if they're not required to disclose invoices if their turnover is below 1.5 crores? It is not possible to report the HSN summary if we're not maintaining computerized accounting. This continues to be hardship for small taxpayers.
Okay, HSN summary actually, you see, small taxpayer till now was somebody who was smaller than 1.5 crore. But to bring in simplification for larger tax base, it was decided to raise the threshold to 5 crore. And therefore, HSN information up to 5 crore could not have waited to be filed in the annual information, and therefore it is in part of the monthly return. Also, by now, trade has settled with HSN, and most of the traders' experience shows are dealing in 10 to 20 commodities. For those 10 to 20 commodity, it will be possible to maintain HSN table. The IT platform also will give you a HSN master table in which you can store the description and HSN, so that while filling, you don't have to go through the entire tariff, and all you have to do is pick up the item from your master table, which will be of 15 to 20 commodities. So we will take care that the difficulty arising out of HSN is handled through HSN, through the IT master tables.
Okay, since we're talking about HSN, here's another query. The HSN code for goods and services were required to be reported at a 2 to 4 digit level. The draft format asks for reporting of services at a 6-digit HSN. Will this not create system configuration issues for businesses and complicate the return filing process even further? So this is a specific query with respect to the HSN reporting guidelines versus the old and new.
Okay, as far as HSN reporting guidelines are concerned, HSN is to be reported at 4-digit or more. So if you are comfortable with filing at 4-digit HSN, even for services, you can file HSN at 4-digit level. If the language is conveying something different, we will have a look at it. But your requirement is HSN at 4-digit or more. And 4-digit is pretty much like a family of services supplied. So it should not be difficult to report at 4-digit.
Okay, so you can continue to report at a 4-digit level as well. Okay, that's another important clarification that's coming. We are going to take a break here on the GST Centimeter. Keep those questions coming in. We address all your queries with Manish Sinha on the new GST return format. That's coming up for you after the break. Welcome back. You're watching the GST Centimeter, and we're discussing the changes that have come about in the new return filing format that has been put up by the CBIC. Let's go back across to Timsy now in terms of the taxpayer identification. Timsy, because that is where we're getting a lot of queries, so let's just take our viewers through that once again.
Well, as you said, when it comes to the taxpayer classification and how it needs to be moved, this is the form that you need to see. The first identification happens here. Would you like to file a nil return? That's what it says. So you need to, if you say yes, it will automatically take you, the system will automatically take you to the nil return filing form. Similarly, if your turnover is up to 5 crores, again, yes or no. You can choose yourself where to mark whether you come under this category or not, and it will take you to the form which leads to exactly if your turnover is up to 5 crores. Similarly, if you go beyond, then you will see, would you like to change the reply to the questions regarding nature of supplies as filled in the questionnaire? So you can also change your replies when it comes to the nature of supplies, and you can choose accordingly, and this form, this particular direction will take you to exactly the form where you need to file what are the new changes that you're going to do.
Okay, this was a big pain point, the fact that you couldn't amend the information that you'd already put in. So this has now been adequately addressed?
No, these are two different things. Here what we are trying to do is create a prefixed profile for a small taxpayer. Depending on your profile, you pick up, and then you file the form which suits your requirement. As far as pain point which you pointed is concerned, that is basically whether you can revise the error which you have made or not. Yes, it is being addressed. For each tax period, a taxpayer will be able to file 2 amendment returns up to the September of next year when you close your books of account. So that it is not one but two opportunities to amend the errors which you have made in any tax period.
Okay, so you will get two opportunities to correct any errors that may have been made, which was a pain point earlier. But joining us now is also MS Money, Senior Partner at Deloitte. Money, thanks very much for joining us. Manish Sinha here with us. We're getting a lot of Twitter queries and our viewers writing in. Any questions that you have on the simplified return format that has been put out by the CBIC?
Yeah, Shireen, thanks. So the question that I have is that when I look at the changes which have been prescribed as far as the return is concerned, to me it appears that we are going back to invoice matching. Now, while I'm personally in favor of invoice matching, and I think it's a very good system to have, it would be nice because when I look at various provisions, including locking of invoices, the basis of taking ITC, and even in the amendment return that was just mentioned, bear in mind that the invoices cannot be amended. So all details except the invoices can be amended. So when I look at all of these together, would I be right in concluding that we are getting back to invoice matching in some form?
Okay. Okay, let me put that question to Manish Sinha. Are we getting back to invoice matching is the question that MS Money is asking. And also when you just address the issue about amendment, no changes can be made as far as invoices are concerned. All amendments can be made outside of invoices. So Mani's question, is he to conclude then, therefore, that we're back to invoice matching?
Answer to both the question is no. Invoice matching practically is not possible on an IT environment for the reason that experience shows that if two people are uploading the same set of data, howsoever good their upload be, transcriptional errors will be adequate and therefore matching will be humanly impossible. You will have very large number of mismatches. This design in fact doesn't do matching. What it does is something akin to what you are used to on income tax side, that your employer uploads the taxes which he has deducted, and then you get to see as to that as a credit to you. So it's a unidirectional flow and you pick up the deductions which have been made. So that's the kind of unidirectional flow which takes place. When the seller uploads the invoice, you pick up those invoices and take credit from that. You do not fill the information of purchases, and therefore there is no matching. But what is taking place is you are picking the invoices using which you are taking the credit which your seller has uploaded. So it is not matching. Point number one. Point number two, can an invoice be amended? Yes, an invoice can be amended. In the amendment return for which the form is there, once you fill in the invoice number, the past information will come and then you can amend that. It will be pretty similar to table 9 of present GSTR1. The amendment facility available now will continue for invoices also.
Okay, so not going back to invoice matching, you're saying that that is not possible in the current IT system, and also that amendments to the invoice itself can also be made, can be possible. Mani, any more questions?
Just one more question, Shireen. Mr. Sinha, thanks for the clarification, very useful. The question that I have is, there is now a concept of locking of invoices, which did not exist in the earlier return. Now, every time the invoices are uploaded by the supplier, they can be locked by the recipients on the basis of which the ITC can be availed. So once an invoice is locked by the supplier, subsequent to that, would it still be possible to make changes to the invoice?
Mrs. Sinha, once an invoice is locked, Mani's question is, can subsequently changes be made? Okay.
For erroneous locking of invoice also, change will be feasible, but your buyer, after having locked the invoice, would have taken credit. So the only condition is, and if you see the concept note, there is a specific, this point stands addressed there. The buyer will have to reverse the credit and then the supplier can amend even a locked invoice.
Okay, so first the credit will have to be reversed
by if taken.
If taken, and then the amendment can be made. Mani, does that adequately answer your question?
Yeah, we will just wait and watch, Shireen, in terms of how the system works, because the differences that we have seen in the return till now have introduced a lot of new concepts, and I think business will need to get used to this concept, such as locking of invoices and various other things. Right, so I think as we go along, we'll realize, what difficulties we face, and we will, take that up.
Yes, You've preempted a question that has come in. Has the government made any plans for transition from the existing return formats to the new one, specifically for closing unreconciled transactions for claiming credit going forward, Mr. Sinha?
What perhaps he is wanting to ask is there would be some invoices which will be still in the float and they have not taken the credit. So when the new design comes in, after that only uploaded invoices will be available for credit. So what happens to those invoices which are in the pending queue, which you have kept as of now? Well, when the return comes, at that point in time, the first entry of the credit table, if you see, which is essentially in relation to pending invoices, the first time when it is launched, that has to be filled by you, and therefore you will be able to take credit of all the pending invoices. Thereafter, the system will start kind of maintaining a ledger of it. So yes, transition has been thought through, and no credit of yours will be lost in the process of transition. Rest assured of that.
Okay, Kunal Barjatia has sent in a question. He wants to know why there is no option to disclose exempt supplies in the Sahaj and Sugam forms. He believes this will create confusion while determining the total turnover as per GST and income tax.
Okay. The answer to that is, you see, in Sahaj and Sugam, we were trying to capture as little information as feasible because we wanted to keep the form simple, and therefore the number of pieces of information which you had to upload needed to be low. As far as turnover is concerned, in the annual return, we can always capture whatever information which we are dropping here. So many of the information pieces have been dropped in Sahaj and Sugam in the monthly return, which will be captured in the annual return. So exempt and other kinds of supplies which do not create liability but create turnover will get captured in the annual return. You don't have to fill it 12 times, you have to fill it once at the end of the year, and therefore reconciliation will be feasible while keeping the transactional return simple.
Okay, and our next question comes into us from Amit Gyanchandani. Kunal, appreciate you writing in to us, and we hope that that answers your question. Amit has sent us a question. He wants to know if he will be denied input tax credit if his supplier does not pay or upload the invoice till the due date of filing the return.
See, I do not know his size. I am presuming that he is a normal taxpayer. In the first 6 months during the transition, credit can be taken on an invoice which has not been uploaded. But after the transition of 6 months or so is over, credit will be available on the basis of invoices uploaded by the supplier. We are expecting eventually businesses to mature to a situation where after the transaction, the supplier is regularly uploading his invoice, buyer is able to see his invoice, and that way he gets assured about his credit and the locking takes place. That will actually bring a lot more assurance to the buyer and seller regarding the credit flows. That is the part of the design. As far as payment is concerned, if the supplier has not paid the tax, credit will still be available, barring a few exceptions where the supplier is perhaps a shell company or is a missing trader. Except for those exceptional situations, credit will be available, and if the tax is not paid, the effort of the tax administration will be to recover the tax from the supplier and not trouble the buyer with recovery forthwith. It can be an option in extreme situations, an exceptional situation, but not a regular occurrence.
Okay, we're at the end of our time here on the show. Before I let you go, Mr. Sinha, the 3 things that people need to keep in mind as we get used to these new forms. Okay.
First, get used to the idea of uploading your invoices, because that brings a buyer-seller kind of locking, and businesses become transparent. It becomes easy for you. The entire process is simple. It is upload, lock the invoices on which you have to take the credit, pay your taxes and move out. And third, you as a buyer will not be troubled with reversal of tax credit except for a few exceptional situations. So if you are doing your due diligence, credits will flow to you without any difficulty.
All right, we'll have to leave it there. Thanks to all of our viewers and our tax experts for sending in your queries. Thanks very much to Manish Sinha for joining us here and answering those questions. And thanks to our colleague Timsy Jaipuria for taking us through the details of the simplified return forms that have now been put up by the CBIC. On that note, it is time for us to wrap up the GST Sentimeter. Don't go anywhere. We'll be back with a lot more.